Hello, everyone. My name is Eric. I'm a managing director at Timber Finance, and I have the great pleasure to welcome you to today's webinar. In this webinar today, we will share key findings from the white paper, which was recently launched and called Investing in the Modern Forest and Timber Construction Industry. We will discuss how timber investments can potentially contribute to the financial and sustainability aspects of your investments, as well as contribute to their decarbonization. We really have a great lineup of speakers and guests today. So without further ado, I'm happy to introduce our moderator, Eric Cooperstrom. Eric is a managing director at Manulife Investment Management and covers impact investing and natural climate solutions. Over to you, Eric.
Thank you, Eric, and thank you for having me. Welcome, everyone. For a quick introduction, building on Eric's comments, I lead impact investing and natural climate solutions at Manulife Investment Management. We are the largest natural capital investment manager in the world. We're also the largest timberland investment manager in the world, with about 2.4 million hectares that we manage on behalf of our clients globally and nearly 40 years of experience. We have a foundational focus on sustainability, and 100% of our client timberland assets are managed according to third-party sustainability standards like FSC and SFI. And lastly, at the end of last year, we launched our forest climate strategy, which will target carbon-focused forestry investments and the generation of high-integrity carbon credits. I'm very excited to moderate this group of speakers, and as the white paper lays out, the timber value chain offers opportunities for sustainable timberland investment, sustainable wood product production, real estate development, and downstream investments. We've got a fantastic group of speakers today who will touch on a range of key points that are highlighted in the white paper. And as Eric mentioned, we'll save some time at the end of the discussion for questions and answers. Our first speaker, who I'd like to introduce, is Paul King. Paul is the CEO of Built by Nature, a network and grant-making fund dedicated to accelerating the timber building transformation in Europe. Previously, Paul was Managing Director of Sustainability and Social Impact at Lend-Lease Europe. And prior to that, he was the founding CEO of the UK Green Building Council and also worked for WWF UK. Paul's also held a variety of nonprofit UK and international positions focused on sustainable building. Paul will discuss how we can accelerate the timber building transformation. Over to you, Paul.
Thank you very much indeed, Eric and Eric. I'm delighted to be here this afternoon. As you have just heard, I'm the CEO of Built by Nature, a role that I've occupied now for just over a week. I'm very excited. This is the first event in my new capacity that I'm joining. And it's a great event to be here for. Very grateful to TFI and all of the people involved in producing the white paper that we're launching today. TFI, as I say, is a partner and what we call a front runner, aligned to Built by Nature's mission, which, as you just heard from Eric, is around stimulating demand for mass timber in construction as both a climate and a nature solution. As the focus today is obviously on investment in this sector, and investors are one of six groups that we define as our big six in terms of front-runner organizations, along with designers, developers, asset owners, insurers, and indeed cities. So we're working sort of across the value chain with a range of different organizations, trying to better understand some of the barriers and improve awareness and understanding of the way in which we can accelerate the use of mass timber and other bio-based materials in construction, as I say, as both a climate and nature solution. Now, the reason that we're working with TFI is because they have fantastic knowledge, experience, and networks in this space, in and around investment in this sector. So from Built by Nature's point of view, they're a great partner to help us understand the needs of investors. We believe from feedback that we've had over the last couple of years that there's too little understanding of the opportunities for investment in and around timber in construction and its supply chain. that the business case isn't always clear. And sometimes there are questions that get raised about the unintended consequences of increasing the scale of the use of timber in construction that could have negative impacts on the climate or nature. And obviously, we need to improve understanding around that. What we do know is that there's a very strong case for directing finance into the value chains around positive climate and nature solutions in this sector. We're talking about a sector in terms of the built environment as a whole that contributes nearly 40% of global greenhouse gas emissions. So it's a very high priority in terms of an area for decarbonisation. And we can help facilitate a key transition if there is sufficient transparency and sustainability in the way that forests are managed to produce timber that can go into construction and be stored in buildings for a very long time. So we also need, alongside the increasing the scale up of new timber to go into construction, we also need to look at increasing demand for circular and reused timber. And that's another part of this market that I think is going to be increasingly important. So as I say, once again, delighted to be here this afternoon. I'm going to listen and learn a lot, I'm sure, from this. TFI can really help us, and I think everybody on this call, understand where investment is most needed and where indeed some of the bottlenecks might be, which Built by Nature and others can help then focus our attention on and to remove those barriers and improve understanding. So this white paper that we're launching this afternoon is a great example of the kind of knowledge and analysis that can help move the field and really drive better investment decisions. So Built by Nature, after this webinar, will be uploading the white paper onto our Knowledge Hub on our website, making it freely available to everybody, and we'll be actively promoting it and disseminating it to all of our partners and front runners around the network. So thanks very much for inviting me today. I'm really excited to be here. This is an incredibly important intervention in this space, and hopefully a really useful tool for investors going forward. So thanks again, and back to you, Eric.
Thank you, Paul. Our second speaker is Dr. Thomas Richter. He's a professor for real estate at the ZHAW School of Management and Law. And previously, Dr. Richter worked as a quantitative risk specialist at UBS in Zurich, where his focus included modeling of default probabilities, loss rates, and real estate liquidation values for the real estate loan portfolio. Today, Dr. Richter will discuss the ecological aspects of timber investments with a special emphasis on timber as a natural carbon dioxide storage solution and the sustainability of timber as a building material and energy source. Dr. Richter?
Welcome also from my side to this webinar. I'm always excited to speak about timber finance, and today I will focus on ecological aspects, as Eric already said. I want to start with some preliminary thoughts. The key question of my talk today will be whether investment in timber and forestry is sustainable. The short answer is it depends. And this is probably the most common response you receive from an academic. Generally, timber and investments in it have great potential to assist the economy in its transition to a low carbon economy. Timber investments are sustainable, for example, when sustainable forestry practices are employed, as Eric's company is doing it, and he said it before, right? Then also if local wood is used, if the wood is utilized to produce durable goods, such as construction timber. Of course, there are other examples of sustainable business cases related to the use of timber, which we will also dive into in a couple of minutes. However, not every timber investment is sustainable. Timber investments may not be sustainable when, for example, logging practices exceed the rate of forest regeneration, leading to deforestation and habitat destruction. Additionally, unsustainable harvesting methods such as clear cutting without proper reforestation can also contribute to negative environmental impacts and render timber investments unsustainable. So as we can already see, the initial question I ask is not extremely easy to answer. In a nutshell, an investor who is interested in making a sustainable timber investment needs to first identify what constitutes a sustainable business case. Once he has identified the cases, investors need to determine how to invest in these business cases, right? So can we identify specific companies or subsectors that pursue these business cases? This is not simple because wood companies can be quite diverse. Additionally, once we have identified the companies, we also need an investment opportunity. And that's the second question, right? Investors need to figure out how to invest in these business cases. If it's a public company we want to target, right, it's easy. However, often innovators in the timber sector are SMEs, so small and medium-sized enterprises, and they are not publicly traded. So it can be challenging to invest in them. Maybe we also need some new investment vehicles. However, once the investor has figured out these 2 points, right, they can contribute positively to sustainability and potentially also profit from the growth prospects of the sustainable timber sector. And you are in this sweet spot where you do good and you profit from it. And that's the goal, right? So let's talk a little bit more about the business cases that are usually categorized as sustainable in academic circles and also the investment industry. If you have already had a look at the white paper, you are familiar with this graph. It provides an overview of the sustainability benefits of wood, which includes first carbon sequestration, second CO2 storage in wood products, and third CO2 substitution. And I now want to quickly go through them. So how does sequestration work? Plants, also trees, they remove carbon dioxide from the atmosphere. And through the process of photosynthesis, the carbon is separated from the oxygen. The oxygen is released back into the environment, but the carbon is stored in the biomass. And this removal and storage of carbon is often referred to as sequestration. And when we invest in funds that buy land and plant trees, we help to store carbon. This is nothing new. This business case exists a long time, and there are also plenty of investment opportunities in this area, such as, for example, timberland funds. However, the sequestration in the forest is only temporary. You can see that when you look at the picture on the left-hand side. When trees grow, you can also see that on the picture, they have a high rate of carbon uptake. However, at some point, they reach maturity. And at this point, we can only lose the carbon storage possibility, right? And the carbon may be released due to a lot of possible circumstances. Could be wildfires, forest decay, or also bark beetles. So now, however, imagine a different scenario, right? This is the one I'm talking about now that you can see in the picture on the right-hand side. Imagine that the tree is harvested from the forest at the height of its carbon storage capacity, and then the wood is used as, for example, construction timber in a building, in a durable good, where it stores the carbon for a long time or possibly forever. And in case of the building, right, the carbon is stored for the entire life cycle of a building, which is quite long, as we know if we deal with the real estate sector. And potentially the wood that is now used to build these buildings it can be reused right after the building has reached its life cycle. If you compare the two scenarios, you can see that in scenario 2, we now have less carbon in the atmosphere because it's not released. It is stored in the building. And this is also why, under certain circumstances, timber is referred to as a negative emission technology. Another important aspects of how timber can help the sustainability transition is that the substitution of emission-intensive building materials of fossil fuels can be done using wood. On average, the wood products have lower energy intensity, and as a result, they leave a smaller carbon footprint compared to building components crafted from alternative materials such as, for example, steel. This is also what the graph from an academic paper on the left shows. It's from the paper Comparative Life Cycle Carbon Footprint of a Non-Residential Steel and Wooden Building Structure. It was published in the Current Trends in Forest Research from researchers from Maastricht University and the University of Quebec. And you can see that in this paper, they have found that the wood structure of the building has only 1/4 of the carbon footprint compared to a steel structure. So we can clearly see this positive substitution effect. At this point, I would also quickly like to ask a quick question to the audience, to you. You can participate in this survey. You can see here by joining menti.com, and you can see it also on the top of the slide, and then enter this code. And the question I'm asking is, in which climate benefits of forests and woods are you as an investor most interested? I'm already excited to see the results. Give you some time to vote. So I think most of you have decided the changes are not dramatic anymore. We are reaching the equilibrium. So we can see that both sequestration and storage are very popular investment cases. In my opinion, also, storage is really on the rise. A lot of people are interested in it. And also, it's, however, not really easy to invest directly into the timber sector that focuses on carbon storage. I think my colleague from Timber Finance, Stefano, will say a few words about this also in his presentation. But it's also what we see in academic circles, that there's a lot of interest for the storage topic. So we as a group, we are quite representative also for the wider group of investors. But after we now talked a little bit about what kind of business cases can be sustainable, I want to discuss how we can proceed to select investments within the timber and forestry investment universe that offer the most sustainability or climate benefits. I use common approaches from the sustainable finance literature. So generally, from an investment perspective, sustainability offers A, a possibility for risk reduction, and B, also business opportunities. And in the area of risk reduction, the exclusion of companies and sector is a common approach. So within the timber investment universe, this could mean to exclude companies that use wood from non-certified forests. You can understand, I think this protects our investments from regulatory initiatives that forbid these practices and then may result in losses in our investment portfolio. Another strategy to integrate sustainability into the investment process would be the use of ratings. So potentially this could be achieved by readily available ESG ratings. However, we already seen that the investment business cases for timber are quite special and not always reflected in classical ESG ratings. Because if we just select based on ESG ratings, this might not match the investor's sustainability strategy for timber. For example, if you want to invest in companies that produce products with carbon storage, as an investor, you might want to assess yourself whether a company makes above average use of the carbon storage capacity of wood, right? Instead of just buying the ones within the timber and forestry industry that have the highest ESG rating. That's the risk part, right? When we look at it from an opportunity focus perspective, it can be said that the sustainability transformation of the economy is costly. For example, for Switzerland, a study from the Swiss Banking Association and the Boston Consulting Group estimates the cost of more than 12 billion francs per year until 2050 to reach the net zero target the federal government has set itself. And after the traffic sector, the highest investment amount is foreseen in the building sector. And we've already seen timber has a business case for sustainable construction, right? And companies that build with timber or produce construction timber, they can potentially profit from it. And it can pay off for investors to select companies that transform their business with a focus on construction timber or in general carbon storage. But also it can be interested in the field of action 4 in this graph, right? To invest in companies that develop new technologies that help to foster the use of timber, for example, for storage of carbon. At this point, I want to make another quick survey. You can again use the setup from before. It should be now available for you to vote. I'm interested in your investment approaches with respect to timber. I would like to find out together what kind of strategies we as a group actually use. Give you again some time to vote. Yeah, so the use of ESG and sustainability ratings is seems to be the investment approach that most of you follow. And what we also see, what is kind of interesting, is that a lot of investors, that's also what I've seen on a broader scope, do not have a particular sustainability strategy for timber investment. But as you have seen right now in this webinar, or also can see in the paper, this might be worthwhile to look at, because the timber sector is kind of special, at least with respect to certain market aspects. Thank you very much for participating in this survey. I'm also almost at the end of my talk, so just a quick conclusion from my side. What can we conclude now in the end? So regulators And politicians, they have very ambitious climate targets, right? I mentioned Switzerland has a net zero target until 2050. And I think it has become clear that timber can play an important role in the transition to a low carbon economy. One example would be, for example, use timber as a substitution for energy intensive building materials. However, despite all the efforts the real economy is currently undertaking, it will not be possible to eliminate all greenhouse gas emissions. For example, some from the agricultural sector, it's not possible for us to reduce them to zero. That means that we need so-called negative emission technologies, which store or remove carbon, right? And timber has the potential, at least from my perspective, to become an important negative emission technology. And we've also seen that timber and forestry is a really large industry, and the companies and subsectors, they have different sustainability profiles. So it's not enough to just invest in the timber and forestry sector. In addition to that, we also need to figure out which companies to target there to really invest in the sustainability benefits of wood or timber. And that's also why you need a strategy to select companies that foster the sustainable use of timber. Probably a quick preview. If we look at the construction quota of residential buildings in Germany, we can see that the use of timber is increasing. So from an investment perspective, we can also say that the timber investment is a growth story, right? And of course, this is also looking promising from a sustainability perspective, because all these wooden buildings whose share is increasing, here shown for the example of Germany, they store carbon, and also most likely they have substituted building materials that were more energy intensive than timber. So that's it from my side. Thank you very much for your attention and also your participation in the surveys. And then Eric will introduce the next speaker. Thank you very much.
Thank you, Dr. Richter. Just a quick reminder for attendees to please add your questions to the Q&A box. Our last speaker is Stefano Charret. He is the investment research head at Timber Finance. Stefano has been working in finance and asset management for over 15 years in roles including investment analysis, trading and risk management across various asset classes. Stefano will round off our conversation by highlighting the different steps in the timber value chain and some of their investment implications, as well as the link between different timber investments and their financial and sustainability characteristics. Over to you, Stefano.
Thank you, Eric. Let me share the screen of the presentation. All right. So again, thanks, Eric, for the introduction. Thank you, Thomas Richter, also for overall, I would say, the great collaboration for the production of the white paper. And let me also use this occasion to thank also the other authors who are not speaking today, Andreas Hecht, Tanja Kornsteiner, and Thomas Fedrizzi, who all contributed to the work. And as Eric mentioned, I will focus initially on the industry fundamentals, on the timber construction value chain, which starts with the forest, with timberland investments. We then have forestry companies who actively manage the forest. They harvest, they replant the trees, they produce logs, and in certain cases also other products. They use certain very specific forestry equipment. So we have also forestry equipment manufacturers, as part of the value chain. We have the output from the active management of the forest, so the roundwood, the logs that go to the sawmills. The sawmills process these logs into lumber. They can be further processed into higher value-added products like engineered wood products. We have then distributors who purchase the engineered wood products or the lumber from the manufacturers, may add also some services, some value-added services like assembly, installation, some advice, etc. They distribute to retailers or to home builders, who are essentially one of the last steps in the timber value chain, where we have the construction with timber that can go from single-family homes to multifamily and multi-story buildings, also commercial buildings. And then these buildings essentially are the piece of real estate that is either owned by individuals, corporations, or by institutional investors, for example, in real estate funds. And we've seen also some specific mass timber focused real estate funds being launched in recent years. Now, because the value chain has different steps and we have different businesses along this value chain, this also has implications from an investment point of view. Different businesses have different characteristics. For example, if we look at the forest, we have an optionality value in the forest that arises from the fact that, let's say, the economy is not doing very well, timber prices are low, and as forest owners and forest managers, you have the optionality to reduce your harvesting, let your asset base grow, and harvest more once market conditions will be better. Different businesses have different returns on capital, different returns on capital employed. You have businesses like forests that tend to have lower returns on capital employed compared to other businesses like certain engineered wood products that have generally higher returns on capital employed. You have products that can have a brand value, that have quality recognition, and they can differentiate. They're not necessarily commodity products. You have different competitive positions in different parts of the value chain. You have parts of the value chains that are sort of consolidated, other parts that are very fragmented. And this also has, let's say, consequences from an investment point of view. And also in terms of scalability, in terms of growth potential, it's very different to grow a forest, a timberland business compared to, for example, a timber distribution business, where you can open new locations, new warehouses, acquire through M&A, smaller player, and so on. So we need to distinguish also within the value chain. These considerations are principally microeconomic considerations, but there are also macro factors that affect and drive timber investments, especially in the construction value chain. And one of these key underlying factors and drivers is building activity. If we construct more homes and renovate more homes, there's more business, and it obviously has some positive consequence. And historically, we see that the industry is cyclical. So everyone needs to be aware that we're dealing with a cyclical industry. And we see, for example, in this chart, that in the last 50 years, there's been a pretty good coincidence between the monetary tightening cycles and the slowdowns in building activity. And this is also pretty much the situation that we're going through at the moment, where with some headwinds for the sector that we should expect in line with history, in line with what has been happening, and what there's not many reasons why it shouldn't happen again, to see once there will be a normalization of monetary policy and macroeconomic conditions, opening up the potential for a new growth phase. Apart from the cyclical nature of the sector that we should, however, never forget, what we see is also a couple of growth drivers when we look 10, 15 years ahead that are not necessarily cyclical in nature. So one of these is the aim to decarbonize buildings, as Thomas was also highlighting in his presentation. We see that timber buildings can have a significantly lower carbon footprint compared to reinforced concrete buildings. We have in certain countries regulatory pressures to reduce life cycle emissions for buildings. That's the case, for example, in France and in Denmark. We should very specific regulations defining limit values for the carbon footprint of their buildings. We have other countries like Switzerland, for example, where we don't have strict regulations in this sense, like in Denmark and France, but we have, let's call them national decarbonization strategies, where timber construction is explicitly highlighted as one of the possible solutions to contribute to the net zero goals by 2050. We have, for example, the Canton of Zurich that financed a study on the feasibility of increasing timber construction in the canton. We have also energy efficiency. There's always this statistics that probably many of you are familiar with. It says that approximately 40% of global carbon emissions come from the building sector, with some 10% of global emissions arising in the construction phase, and 25 to 30% arising from operational emissions from heating and cooling. And timber can also provide solutions to address not only embodied carbon, but also operating emissions, for example, through wood-based building insulation products. We have also carbon storage, the concept of carbon storage that was also surveyed by Thomas, where we have, for example, the UNFCCC concept note that on carbon removal activities that includes explicitly mass timber construction as one of the possible ways to address the need to achieve net zero in the next decades. And we have certain carbon farming goals that have been also defined by the European Union and are linked to the idea of carbon credits, which is being developed also by companies including Timber Finance, also in collaboration with other partners, who are developing methodologies for carbon credits, specifically with respect to timber construction. And if we move from the, let's say, more economic aspects to the financial aspects, we can see also a certain evolution of timber investments. We have, let's say, 50 years ago, this establishment of timber investment management organizations that helps professionalize timberland management and make timberland a more attractive and more viable alternative investment solutions for institutional investors, for example, like pension funds. Then we had evolving REIT legislation in the US. In 1999, we had the first exchange-listed timberland REIT called Plum Creek, who later merged with what is today the largest timberland REIT in the US, well, timberland REIT globally, which is called Weyerhaeuser. Then in 2007, we had the first timber ETF that was launched, the iShares Global Timber and Forestry. Just a few weeks later, we also had the Invesco Timber ETF that was launched. And in 2008, the largest timber equity fund that is on the market today was launched. And it should be noted that we went from a focus on the forest with TIMOs and timber REITs to a very broad concept of timber investments that were covering forest management, wood products, but also a lot of paper, packaging, and even consumer goods products through these listed ETFs and timber equity funds focused on listed equities. And in 2023, so this year, Timber Finance launched the first actively managed certificate with a focus on the timber construction value chain, trying to let's say establish a new trend. So moving away from the very broad concept of very diversified and very broad general timber businesses to a focus on the timber construction sector because of the carbon storage benefits that were mentioned also earlier. Even if it's a very small niche, so timber equities are a small niche, but we see still how different products can differentiate themselves. In this chart, the key message is simply that we can go from timber investment products that have a very strong bias towards short life cycle products like paper, pulp, and packaging, to products that have a much longer life cycle focus, specifically on the forest and on durable wood products. So not every timber investment is the same. In terms of risk and return, at least from an historical point of view, you see here on the left side in green the performance and volatility of timberland investments. Very solid, very robust performance over the long and medium term with very low volatility, although the very low volatility is also explained by the fact that these investments are not listed. Whereas if we move to the right of the chart, we see the performance of listed equity, timber equity indices, with, among others, the one with the longest track record, the S&P Timber, that's also used as a benchmark by the iShares ETF, that also provided a pretty robust performance over the long term. And if we look at the medium term, we see a differentiation in performance between the, let's say, broader timber equity sector and the timber construction sector that is the focus of the Timber Finance Index, which was launched in 2022. So the performance that we see here is backcasted performance. But the key message here is really just that within the timber equity sector, you can still obtain very different risk and return profiles. So even if it's a niche, it's not necessarily a uniform niche, and there is a need to understand exactly what part of the value chain, or what part of the sector, which subsectors you want to focus on. Now, because when we talk about financial products and sustainability, at the end of the day, we also have to be confronted with sustainability regulations. We have to keep in mind that at the end of last year and end of 2022, the Federal Council in Switzerland decided to clarify some aspects of some concept of sustainable financial products, and they clarified at least tried to clarify what financial products can be labeled as sustainable and which cannot. And the interesting part of these clarifications is that an exclusive focus on ESG risks, or just reducing ESG risks, cannot be considered, is not enough to consider our financial products as sustainable financial products. So you really need an alignment or an active contribution to certain specific sustainability goals. And we're talking about sustainability goals like the Sustainable Development Goals of the United Nations, or the Paris alignment in the case of the temperature increase. And in this context, it's important to understand for investors who are interested in timber that I think it's already clear from what we said, but just to make it even clearer, different timber products have very different sustainability characteristics in addition to very different financial characteristics. For example, if we take timber REITs from an environmental point of view can provide investors with a very high exposure to the sequestration performance of the forest, sequestration and storage within the forest, can provide you with a low to medium exposure to the long-term CO2 storage in durable wood products, mainly because some timber REITs also manufacture durable wood products, and they provide. I mean, it's hard to say that they actually provide you with product substitution. Whereas if we focus on companies that are active in the timber construction value chain and the manufacture engineered wood products used in construction, there you have a much higher contribution in terms of long-term CO2 storage in durable wood products. At the same time, if we look at other companies, for example, companies who manufacture wood-based wood fiber insulation, there you have both a contribution to the long-term carbon storage in durable wood products, because these insulation products that last decades store carbon for decades, but also they provide for product substitution effects, because they replace also they replace fossil-based insulation products very, very clearly. And they also provide other, let's call them scope 4 benefits, meaning that in addition to storing carbon and replacing fossil-based insulation products, they still help reduce operational emissions in buildings. So you have, again, a very different environmental benefit and environmental and sustainability profile for this type of investments. And in addition to these, of course, then you have different liquidity profiles, different liquidity profiles for timber stock, timberland funds were more liquid, lower volatility for timberland funds, as we mentioned, and then we saw before in the chart, much higher volatility for listed timber equities, and so on. And with this, I'm essentially done with my presentation, and I give the word back to Eric and look forward to any question and discussion. Thank you.
Thank you, Stefano, and thank you to all of our speakers. I see we do have a few questions from the audience coming in, so we'll try to address those in the next 12 minutes or so, and apologies if we don't get to all of the questions. First question, can the speakers address the distribution of forests that can benefit from harvest from a carbon perspective, and those that can benefit from not being harvested? Any speaker want to start off? I'm also happy to contribute to that answer. I'll start us off, and others can chime in. I'd start by saying every forest is different. Different forests represent and demonstrate different growth and yield potential, and different biodiversity and social and local community values. So there's certainly a range of characteristics that need to be taken into account to assess the potential for sustainable timber harvest. Certain forests, especially those in tropical forested countries, like the Amazon rainforest, have an immense wealth of biodiversity and local cultural and social value, and should certainly be a focus for protection. Other forests represent the potential for sustainable commercial harvest, and there are existing studies that point to the increased carbon sequestration potential when sustainable timber management and increased forest health are taken into account, as opposed to just letting a forest grow and natural mortality set in, and the potential for natural disasters that could release sequestered carbon. So complicated answer and really a range of outcomes depending on the specific forest in question. Any other input from the speakers on that one?
From my perspective, also quickly, of course, it's not the idea that we harvest every tree in the world and make wooden buildings, right? And as Eric perfectly correctly said, there are forests we don't want to lose. For example, one argument, as Eric also said, biodiversity, right? So there can be a lot of arguments why we don't want to harvest the forest. But it's a very good question, because I think we need to think about it, right? Which forest can we use, which not? There is also a lot of research on that, right? But I think it's fair to say that there's no clear consensus, right? Apart from that, also, I think one should not forget that not only the trees are used and don't die, right? In the sense of, for example, by wildfires or beetles. We can also use the area to have new trees there, and their carbon uptake is much faster than the ones from the old forest, right? So also this, I think, is an aspect I didn't show very clearly in my presentation, but we should take into account when we think about this.
There are a few questions focused on circularity, circular economies. The white paper mentions the cascading reuse of wood. I'm curious, how technological innovations really contributed to the reuse of wood and the application of wood building materials in both new construction and there's a question that is targeted at retrofits.
I might just pick up on the question, particularly about retrofit in the first instance, because I think this is a really interesting area that we're hearing more and more about. I happen to be speaking this afternoon from London, and recently we've seen a real shift in central London towards discussion around retaining buildings rather than demolishing them and replacing them, and because of the embodied carbon in the structure of these buildings. And therefore people are increasingly, of course, looking at how those buildings can be both modernized and retrofitted, but also extended, including and particularly perhaps extending upwards, where, as the questioner points out, timber can be a great material for doing that because of its lightweight nature relative to other materials. In fact, this is an area where recently Built by Nature has just actually granted some funding towards further research. So over the coming months, we hope to be able to share more of the experience in that space, because I think it's a really important development. So that's a point I wanted to raise. I think just quickly from me, I'm sure others have more to say about this. Your point about cascading uses, I think there is certainly greater appreciation of how we can, of course, extend the life of timber where we've determined that it's appropriate to harvest timber in the first place, and how we need to make sure that we minimize waste. We then need to make sure that the maximum amount of timber that is coming out of a forest goes into long-term uses. Again, as several of the speakers have highlighted, rather than very short-term uses, or perhaps for energy, we need to prioritize long-term uses. And then when we prioritize that use for construction timber, obviously design is really important in terms of how we ensure the facility to disassemble buildings and reuse those components, potentially repeatedly in different buildings. And when they can be no longer used as structural components, then how they can be used through a cascade of uses through particle board, fiber board, and so on, before finally they have to be disposed of. But I think those cascading principles of how we extend the lifespan of timber are really crucial in terms of how we maximize the benefits of this amazing material, which, if it didn't exist, we'd have to try and invent.
Thank you, Paul. We have a question asking about the recommended approach to valuing carbon storage from wood products. And I might direct that question to Stefano, as I know that Timber Finance has been working on carbon crediting mechanisms.
Yes. To be honest, yeah, it's other people in the company who are more focused on the, for example, the development of the methodology of timber of carbon storage in timber buildings. But I think what we can say is that we have to consider, of course, always the horizon, or how long will the carbon be actually stored in the wood product, and the type of wood products, the type of houses that are built. Also, we see, there are very different ways of building in different countries and in different regions. And then the benefit that you get from the carbon storage is also, let's say, a function of time, and it's there's a kind of discounting over time that needs to be considered. So it's I'm not sure who mentioned that before. You mentioned the idea before. Maybe it was you on the evaluation of the sustainability of forestry, etc. It's all these questions seem simple, but they actually hide a lot of very tricky aspects, and then require a lot of thinking and detailed reasoning and calculation.
From an academic perspective, I think discounting is very important, right? We already have now possibilities to assign money to CO2 emissions, right? Or connected with money, and then we can use usual discounting methods as well, right? For example, if we imagine that CO2 emissions in year 1 cost 2,000, in year 3 costs 3,000, we can discount these cash flows to today, and then kind of we will be in a situation where, as described in the question, carbon uptake in the future will be worth less than today. And I think that's, at least from an academic perspective, how it needs to be.
I might add just one perspective from the timberland investment space. Forest carbon and associated protocols have been established over the past 25 years or so, and continue to evolve. And we really view carbon finance as yet another component of that optionality that was mentioned earlier, in terms of how you can manage a forest sustainably. I think we have time for one last question, and I might ask the group, what systemic changes are required for timberland investments to go mainstream? We mentioned certain regulatory aspects, certainly the attractiveness of various asset classes and investment types for investors, but what are the catalysts necessary to really help timber-focused investments become more popular?
Well, if I may take this one first, I think first of all we need also to kind of distinguish from one type of timberland investment to the other. I mean, timberland investments have been more mainstream for institutional investors in the last decades. And if we want to conceptualize a way of, let's say, going mainstream in the sense of the democratization of private markets that's been talked about a lot, we should start to think about ways of fractionalizing, or let's say, or trendy word, tokenizing, for example, timberland ownership. If we look at very broad timber equity investments, listed timber equity investments, I would say that the broad timber sector that includes also this paper, pulp, and packaging, etc. Maybe it's not. Maybe calling it already mainstream is an exaggeration, but it's already, I think, reasonably well represented if we think with 2 ETFs holding a few hundred millions, and then one very large timber equity fund that's above 1 billion. I think you're already getting to a reasonable size. And if we want to instead focus, as we're trying to do, and to explain to people in terms of the reasonable sustainability aspects of doing this. If we want to focus on the timber construction value chain, then we definitely need more companies going listed. We need larger companies because many of the companies that are on the market are too small to be interesting from a liquidity point of view, also for institutional investors. And so we would actually need a little bit of a trend of more private companies going public, maybe some private companies ideally merging and becoming bigger. So moving away from a, let's say, smaller shop concept and expanding into larger companies that then can IPO at reasonable size and provide reasonable liquidity. And we should see definitely these trends depending on the type of subsector where we want to focus.
Stefano. Paul, Thomas, any final thoughts on that question or any other points?
I agree with Stefano. I think one option we also have is, apart from changing the industry structure, is having new investment vehicles that we can use to invest also in SMEs, for example, private equity funds that invest in sustainable small timber companies, or private debt funds that finance these companies. I think also this could help. And yeah, from my perspective also, I think the UN estimates the uptake of carbon storage to be up to 1 gigatons of CO2 equivalents a year, right? And if this can be monetized, the market would be huge. So yeah, I'm interested to see how this develops.
Sorry, if I can also add two more points that I didn't mention, but I think are also very important. On one side, what we would definitely need is all companies pretty much to report on emissions, and ideally in a very standardized way, because as long as that doesn't happen, it's also more difficult for institutional investors to invest in these companies. So that's one thing that I think is absolutely necessary. And we're seeing also regulatory developments, although they sometimes are being shifted forward in terms of timelines, but that's an important point. And the other thing is to have really, let's say, established uniform way of also accounting for removals and biogenic emissions, so that there's a level playing field for all companies. And it's not just, the companies, certain companies that can benefit from using wood products, and that benefit cannot be captured in terms of reported emissions and environmental benefits by the timber companies who actually manufacture those products. A little bit similar to the idea that you have renewable energy companies who produce clean energy that help other companies lower their emissions. So there needs to be a way for them to be recognized by investors who are focusing exclusively, for example, on metrics like carbon intensity and so on.
And if I can, Stefano has really just emphasized the point that I was going to make. I'm very pleased he did, and very eloquently too. I think that's absolutely critical. We need greater transparency and kind of a robust consensus about how we measure the carbon benefits, and that, as I say, that's done in a transparent and a consistent way across industry. Some of the questions alluded to the fact that there are currently different methodologies, different views on how you can count carbon sequestration, for example, and I think we need greater consistency so that we can really measure the triple benefit that was talked about in terms of the sequestration, the storage, and the substitution. We need really a level playing field so that everybody can understand how we can maximize the benefits when we do use timber, alongside the other things that we've touched on this afternoon, which is the importance of looking at every forest on its own merits. And we're very careful to make sure that we avoid the unintended consequences, the risks of actually having any negative impacts, both from a climate perspective or a biodiversity perspective. So we need to make sure that we are harvesting timber only in a sustainable way from sustainably managed forests, and that should be, independently certified, and that we then have a very consistent and transparent way of measuring the carbon, and make sure that we're not double counting in some cases the carbon benefits. So I think I'd completely agree with the points that have been made on that need for consistency and transparency. Thank you.
All right, I guess we've come to the end of the webinar today. Just from our side at Timber Finance, thank you, Stefano, Thomas, Eric, and also a special thank you to you, Paul. You mentioned that Timber Finance is a front runner, but I think it's fair to say that Built by Nature does their fair share of front running as well. It's definitely one of the leading organizations, initiative in the decarbonization space in Europe and maybe even global. And without these grants and this funding, works like this wouldn't be possible. So thank you, Paul. Thank you to Built by Nature and other organizations, the Migros Pioneer Fund, and also the Liechtenstein Bankers Association. Thank you much for your contributions and enabling us to deliver works like this.